So if I gave you two options and said, if this wants to work, by the way, option one is we're going to do something together, and if you take part, you may lose nothing, but you may win or gain £50,000. And option two is you don't take part, so you don't win anything and you don't lose anything. Who would go for option number two? Raise your hands. So Bernard, it's Bernard, isn't it?
Yes.
So Bernard wants to go for option number two. And did you have your hand up? Somebody over here? So why option two, Bernard?
I want to win 50,000.
No, that's option one.
That ain't option number two, Bernard. Okay. Do you want to change your mind, or do you want to phone a friend first?
It's a bit grey, isn't it?
Sorry?
It's a bit grey from that distance, though, isn't it?
Yeah.
It's a bit like, to be fair to him. I mean, it's not that clear from a long way.
All the younger people with good eyesight are sitting at the front.
Bernard, you have one friend in the room, which is Oliver. Okay? Or at least one friend that we know of. So at least we've established something. So of course, you'd be mad not to. You would go for option number one, because you've got nothing to lose. And to some extent, that's what tax is like, because it doesn't cost you anything extra, does it? And if you've got other businesses, which I assume some of you have, by the way, if you want to make an extra £5,000, depending on your profit margin, you may have to turn over an extra £50,000 if your net margin was 10%. To turn over £50,000, you may need to have larger premises, take a bank overdraft, get more working capital, employ more people, more money on sales and marketing, which means it would cost you even more. To have a £5,000 tax saving, you don't do anything extra. So it's 100% gain, benefit, cash flow advantage into your pocket. But before we look at any tax planning, there's three questions you have to ask yourself, which our friend over there helped us with the first question. Is it legal? Because at no point do I think you should ever think about doing something illegal. It isn't worth it. The amount of cases that I've seen in the last 20 years where people have failed to pay their tax and then get caught out and then have to pay all the tax back and the interest and the penalties and they're on HMRC's radar, it isn't worth it. So never ever even think or contemplate doing anything illegal, because I can assure you from experience, at some point HMRC will find you, and when they do, they're going to come down like a ton of bricks. Okay, it might sound obvious, but I've seen way too many cases where people have unfortunately gone for the shortcut route. Number two, is it effective? What do you think I mean by is it effective in terms of tax planning? Anybody want to hazard a guess?
Does it actually save you money?
Does it actually save you money?
Does it give you a benefit?
Does it give you a benefit?
Does it work? Yeah, does it work?
Does it work? Yeah. So quite simply, then you're on the right lines here. Is if you, and the reason why I bring this up is I've come across people where they've paid an accountant or a tax advisor, let's say £10,000 for a piece of tax planning, and the saving to them, the net saving is £5,000. Why would you do that? But it happens. If the saving is £5,000 per year over the next 10 years and you're paying £10,000, that's not a bad deal, because you paid 10 grand and you got 50 grand saving over 10 years, net saving £40,000 is fine. But you've got to work out, is it effective? Darren?
But you don't know if it's effective until you've had someone look into it, and then you pay the money for the support, and then you realise you didn't benefit.
Yep.
That sometimes happens, right?
It happens, that's right. So you've got to do that work up front to make sure it's effective and it's going to work for you after you've answered the first question, which is it legal? And the third question, where I need your input, is it acceptable? So for this question, acceptable to whom would you say?
To you and to HMRC.
To you? To you?
And to HMRC.
HMRC? Why HMRC?
Well, for the reasons you just mentioned, you know, you don't want to be looking like you're swindling money and then be caught out and be on the radar and they come down onto you like a ton of bricks.
Okay, so we're going to drill down into this, and I've kind of already covered this. Who writes the tax rules in this country?
The government, yeah.
The government.
Of the day.
Yeah, of the day, that's right. What's the job of HMRC? to implement those rules. So when HMRC, Robert, implement those rules, what do they do to the tax law? Interpret it. And is their interpretation always going to be accurate and correct? And so their job is to enforce the rules, and by enforcing the rules, what are they looking to do?
Increase revenue.
Increase revenue. So their job is to interpret the rules and get more money out of you. Your job, or the job of your advisors, is to interpret the rules to help you pay less tax. So I would argue it doesn't have to be acceptable to HMRC, but it has to be acceptable in the sense that the rules have been interpreted correctly. Okay, but you won't be surprised to hear, by the way, every time I ask this question, a number of people in the room, by the way, say, is it acceptable to HMRC? If we did everything that was acceptable to them, we'd always be paying a lot more tax. Okay, so you've got to be comfortable, and the simple answer to this particular question is, can you sleep at night knowing you've done something? If the answer, generally speaking, is yes, I can sleep at night quite comfortably having done something, I'd say that's the first test. Say, okay, maybe you should do it. It's not that simple and straightforward, by the way, but if you're comfortable with it, do it. If you're not, don't do it. So somebody mentioned SDLT, I think it was Oliver. I'm going to share an example with you of something which I did. This is from 3 years back now, and there are other examples. So I was approached by somebody who in fact was on this tax course probably, let's say, 3.5 years ago, and she was buying a property, replacing her main home. So and the intention was, I think, to sell that house and then buy a new house. Are the slides okay, by the way? Are you okay? Can you see them? Yeah, good. And she and her husband were buying the property for £650,000, and the SDLT worked out to be £42,000. And the 3% would be refunded if they sold their first initial home, because it was a replacement. Does that make sense? So you can do that within 3 years. If you don't replace it, then you pay the additional 3% on the second or additional property. Everybody with me so far? Yeah, okay, Oliver? And so £42,000 was a liability. If she gets the 3% back, she's got to pay £22,500. Here's all the figures. We don't need to go through them in detail, because I want to show you what we did. She shared with me that when she was buying that property, at the back of the house, or on the side, I don't remember exactly, but somewhere on that property they had a granny annex, and that had a separate entrance, it had a separate bedroom, and it had a kitchen and a bathroom, which means it is a separate dwelling for SDLT purposes. If that happens, you can claim multiple dwellings relief. Yeah. What that simply means is you divide the price by the number of properties you're buying, and then you work out the SDLT on each property, and then you times it, or multiply it by how many properties you've got. And generally speaking, depending on the value of the properties, you may come to a place where you pay less stamp duty land tax. In this particular case, again, I'm not going to go too much into detail, but this was her starting point. If she gets the 3% back, you'll see she only pays 22.5 grand. If she doesn't, she pays £42,000. With MDR, how it worked out, and here's all the numbers, by the way, she was going to pay £6,250 per property. You times that by 2 properties, because she's got the main home and the granny annex, and she ended up paying £12,500. So if she doesn't sell her first home, she'd have paid £42,000. If she does sell her first home, she'd have paid £22,500. She ended up paying £12,500. So either way, minimum £10,000 saving. So if you're ever buying a property with a granny annex, there's a possibility, there are some rules, but there's a possibility you may be able to reduce your SDLT. If you're buying a property from somebody who is selling 2 or more properties to you, there's the possibility you could save SDLT. And how it works, generally speaking, is, let's say I'm buying a property, 2 properties from Darren. One is for £600,000 and the other one is for £200,000. Okay, so there's a price difference. It's likely there's an SDLT saving. If I'm buying 2 properties from Darren, both for £300,000 each, there's not going to be a saving because it's the same price. Does that make sense to everybody so far?
Does that work if, so I've got a property in mind that's got a basement flat,
Yep.
and then it's got a house above it.
Yep.
It's still as one title, it's not two.
Yep.
So could you do exactly the same thing? Is that basement flat almost the equivalent of a granny annex?
Does the basement flat have a separate entrance?
Yes.
Okay,
Yeah,
yes.
it's rented out totally separately, so
Yep, you can. Have you bought that or are you looking to buy it?
looking to buy it to sell it on.
Yeah. So, yep, you can. Oliver?
Thanks. I'm always wanting to be smart with the tax, but cautious not to be divisive. At what point would it be classed as a granny annex? And, would they look at when it was advertised over a period? Would it be exchanged at the point of completion? From HMRC's point of view, without...
It doesn't have to be a granny annex per se.
No, I'm just using that example, sorry.
Yeah, so it doesn't matter. When you're looking to complete the transaction, as long as there's 2 or more properties
Yeah.
with, as I've said, separate entrance, bathroom, bedroom, all that type of stuff, you'll be okay. You can then, the challenge you're going to have is with the challenge everybody has, with the challenge Vicky had. So this is the actual person who's on the tax course, and we did this for her. Do we have any lawyers in the house by any chance? No? Any accountants? Okay, that's good, because then I can say whatever I like and nobody's going to challenge it.
HMRC officials?
Yeah, yeah. And any HMRC tax inspectors. So the challenge you're going to have is when you go to your solicitor, they aren't going to be comfortable with this, just so you know. And we had this, I think, on Monday night in Ipswich, I think, wasn't it? Somebody was talking about it.
Yeah.
Where he was, I think it was Peter who was saying his solicitor doesn't quite understand the transaction, and he's saying he can't do something. Do you remember?
He's not qualified on?
Yeah. Solicitors aren't allowed to give you tax advice. And if you look at their terms and conditions, it says very clearly there, we cannot give you tax advice. The bigger law firms have tax advisors who work for them, the smaller ones don't. But unfortunately, what you'll find is they all insist they want to file the SDLT tax return, or the return. I find that very odd, but there's no way you're going to get them to move from that. I've tried so many times and they will never not move from it. What you can do, however, is ask and tell them, if you don't offer tax advice, we're going to go to a tax advisor, i.e. somebody like me, and they will give me advice in writing, and then you follow it. And they are happy to do that. Why do you think they're happy to do that?
Indemnity.
Indemnity, yeah. Because then they push the liability for the SDLT from themselves over there. Because the number one thing most solicitors are scared of is being sued, because it pushes up their PI from, let's say, £50,000 to £200,000, and that means some of them, the smaller firms, will probably go bust. So don't always, and the really odd thing is, most of us go to our solicitor and get them to work out our stamp duty, land tax liability, don't we? And I'm trying to be careful here, because I don't want to say they don't know what they're talking about, but they don't specialize in SDLT. So what I think they should do is say, can you speak to somebody else who knows what they're talking about to work out the figures for you and then bring them to us? Unfortunately, they don't do that. They just go on to the HMRC tax calculator, which we can all do, punch in the numbers and say, Robert, this is how much you're paying. Now, in fairness to them, 90% of the time they're right, because it's a simple transaction. But 10% of the time they're not right, because they don't know all the different quirks. And SDLT, it has a lot of quirks to it, which most people don't know about, because most people don't deal with. So a lot of accountants and tax advisors are comfortable talking about income tax, capital gains tax, inheritance tax, entrepreneurs relief, all the other taxes, but most of them aren't comfortable with SDLT, because most don't come across it that often. It's only those who specialize in working with property investors who come across it. So with SDLT, Oliver, because you mentioned it, okay, there's quite a few different opportunities. I'll probably share one more example with you in the slides later on, and then we'll probably talk about any questions you've got. But whenever you're buying a property, make sure you, unless it's a plain vanilla, just a single let. If you're buying anything else, if it's commercial, mixed use, got stables on there, granny annex or something else, make sure you speak to somebody who's an SDLT expert, because I'm fairly confident they'll find some saving for you. Okay, so just put that in the back of your head.
Did you say stables?
Yeah, absolutely, because that has different connotations. Any commercial element has different connotations. We could do a whole 3-hour session here on SDLT, by the way. You'd probably get bored, by the way, but that SDLT has a lot of opportunities which most people don't know about. So the next slide here is wholly and exclusively, which I'm not going to spend too much time on, simply because you wanted to know more about this stuff here. But wholly and exclusively simply means, because a common question I get asked all the time is, what can I claim? Because I think most people are concerned is, am I missing out on something? Okay, and the general rule for you to take away today is, you can claim anything in your business so long as it's wholly and exclusively for the purpose of the business. There are some restrictions and limitations, but generally speaking, as long as it's wholly and exclusively for the purpose of your business, there's no limit on what expenditure you can or you can't claim. Yeah, that's the test you have to meet. Dana.
According to whose interpretation?
According to the interpretation of your accountant or your tax advisor. Yeah? And even then, they might be wrong, because if you've ever asked your accountant a question, and if they've responded by email and send you a link to HMRC's website, Dana, going forward, if they do that, what are you going to do to them?
Change that.
Change them.
Sorry?
Change them.
You're nice and polite, aren't you? You're easy going, but yeah. So you're going to say, don't tell me that. Look at the tax rules and tell me what you think. Because if they point you towards HMRC's website, then they're doing exactly what we established earlier with Robert. They're telling you what HMRC want you to do. And I'm not saying, by the way, HMRC are wrong, because again, let's just say 90% of the time they're right, but that 10% they might not be right. Yeah. So don't go refer to HMRC's website as the Bible. I mean, cross-reference it, but don't always go with just HMRC's guidance, because their interpretation may not be the correct interpretation.
No, actually,
Anne, was it Anne? Sorry?
Anel.
Anel, sorry, forgive me, Anel.
Without the G. Don't worry, it's a very difficult name to remember, so I always say it's Angel without the G. There you go.
Imagine my name, and why I call myself Shaz, but anyhow.
Yeah, but that's what I always say. You've answered the question really. We've had a situation where we've booked a strategy session at a spa day, and in the end our accountant took it out as a director's loan, which I thought was bit off, but you've answered the question. It is just how they interpret it, and knowing what I know now, I'd probably challenge it a little bit. I mean, yeah, anyway.
So, okay, we're going to skip these slides because I'm going to do that for you. There's something else though which I will share with you, which we're not going to go into too much detail, which links in with what you've said. There are certain expenses, Anel, was it Anel? Sorry?
Yeah.
Anel, there are certain expenses which have a dual purpose.
Right.
Okay, and just because something has a dual purpose, it doesn't mean you can't claim it. So I'm going to give you a simple example. You work for Barclays Bank. Barclays Bank pay for your uniform, therefore you're wearing clothes. Now the general understanding is everybody has to wear clothes to remain decent. So you're wearing clothes to remain decent, they pay for your clothes, it has Barclays logo on it. Barclays claim that as an expense, which they can do, by the way. But you've got two purposes. Can you claim that or not? You can claim it. So if you've booked into a spa for a strategy day, and you just happen to use that because it's got a spa there, as long as you can demonstrate it was for business purposes and you just enjoyed the spa while you were there, it doesn't matter. The same thing applies to a wider context. Let's say you've gone to a conference to America somewhere.
Coming to here.
You come into here, but let's make it a bit more exciting, my friend. Okay, so you've gone to a conference in Las Vegas, okay, and the flight costs you £2,000, okay, and you're there on the conference for a week, okay, and then you end up staying there for an extra week, which you just want to enjoy your time out there. You can claim the entire flight there and back, okay. You'd claim 1 week's stay for the conference. The additional week, I would say to you, don't claim, because that's when you were spending time there traveling Las Vegas. So it's got a dual purpose, but you can claim most of it apart from the second week. Does that make sense?
Yeah.
But most accountants, unfortunately, are nervous with that kind of stuff and say, oh, you can't claim it, because it's easy to say you can't claim it is the easy answer, isn't it? So I would say to you, always challenge them, say, why not?
Yeah.
Why can't I? And then see what they come back to you with. Thanks for watching, and I hope you enjoyed this video. If you have, by the way, make sure you click like, subscribe and post a comment because that tells me that you're engaging and you're finding the content useful. And if you like this video, make sure you check out this video here because it's the next stage in terms of your learning and development.